How's it going, guys? Just wanted to talk about banks reducing your credit card limits and canceling your credit cards. This is a big issue right now, and I think a lot of people don't realize it. And I wanted to talk about it to make sure that people were aware, at least. Okay. Right now, 1 in 4 Americans. There's a study done by CompareCards.com where they did they surveyed over 1,000 people, and they figured out that 1 in 4 Americans right now are having their credit cards closed down, and then 1 in 3 on average are having their limits reduced. Now, those are big numbers. That's quite a few people. So it's happening a lot more than you would think. So don't think that oh, this is not a big deal. It's not going to happen to me. My credit's perfect, or my credit cards, I pay them on time. That doesn't matter. Right now, banks, especially big banks, are trying to reduce their exposure and their risk right now. So it's about risk for them. They're not sure how this pandemic is going to affect them or affect things, so they're trying to reduce the risk. Okay. So this is even worse than back in 2008 during the recession back then. Okay. There's a study done by Phoenix Synergistics. And 1 in 6 people were having this problem back then. Okay, 1 in 6. So they're either having their cards closed or their amounts reduced on their credit cards. So even today, it's even a bigger deal. And the reason being is because of their risk. Okay, again, they're trying to reduce their risk and their exposure. Now, the biggest group of people that are at risk for this are people that are high income, making over $100,000 a year. Okay. Because those are people that are going to have the highest balances, right? And those are the people that are more than likely not using their cards as much, so they run the risk of having their cards closed down, okay? The other thing is, if they're using their cards a lot and they pay down their balances, on average, people are seeing over $5,000 reductions in credit. So that's a big number. But it's not only high income. So the other big group are the millennials, right? Millennials, there's a study done where every 4 in 9 millennials are having their cards canceled, and 5 in 9 are having their cards reduced, their limits reduced, which are obviously big numbers. That's a lot of millennials. Millennials being aged 24 to 31. Now, why is this a big deal, right? Why does it matter? Utilization is a big factor. It's the second biggest factor in your credit scoring model, right? So it does really affect your score. A little bit of utilization loss or a little bit of credit loss, not having as much credit available to you, can make a big deal on your score. Okay, so what can we do about it, right? The biggest thing right now is if you have big balances on your credit cards, I wouldn't normally tell you this, and I'm not a CPA or a lawyer or anything like that. So this is just my advice and from what I've seen. Take this information and you're going to do what you want with it. But what I would do on credit cards that have big balances is do not pay them off all the way. You can keep paying on them. Obviously, you want to keep paying on them. You don't want them to hurt your score that way. Late payments are a big deal, so don't have that. But I wouldn't pay them all the way down, okay? Because they can reduce your limits when you do that, and it has happened to quite a bit of people, as you can see from these studies. Now there is another lady that I've heard of even. So I'll tell you an example, right? A lady had a $16,000 SBA loan that she took out from her business to pay down some credit cards that she had, personal credit cards. She used $14,000 of that money to pay down her personal credit cards. Well, what happened was the credit card companies reduced all of her limits down to what she paid. So not only did it not help her utilization or her score or anything like that, she lost all that credit, all those limits, and she still owes that $16,000 loan on top of that. Now, obviously, she was going to have to pay it off at some point anyways, but right now it's better to have the cash on hand, especially during this pandemic, than to have these limits reduced. Now, obviously, if you're going to buy make a big purchase, like buying a house or a car or something like that, you're going to need to pay down your credit cards and have your utilization low because it affects your score. But if you're not making a big purchase, I would highly recommend not paying down the balances and just paying on the cards, but just not paying them all the way off. The other thing is not using your cards is a big deal. So these are the people that are having your cards closed when they're not using it. Now, this is when you're not using it for about more than 90 days. Okay, so at least use them within 90 days. I would say even sooner than that, every couple months. Buy groceries or gas or something on it and pay it off. So that way you're not going to have them cancel your. Okay, so in conclusion, guys, like I said, this is a big issue going on right now. Just want to make sure you're aware of it. If you liked the video, make sure you comment, like it, subscribe, and share it with your friends. Okay, it would really help out if you do that. If you have any questions on credit in general, that's what I'm here for. Message me, go to our website, give us a call, and we can help you with your credit as well. But I wanted to make sure that everyone was aware of this. So that's it for now. I'll talk to you guys later on the next video.